Good morning and welcome to the Leadership and Insurance podcast. I'm your host, Alex Bond, and I'm very fortunate today to be joined by Tim, who is the founder and CEO of Yokahu. Tim, how are you?
Hi, Alex. Yeah, really good. Thank you. Great to be here.
Good. And you're joining us from the lab, I would appear, those very distinctive lights we can usually give to the game away.
Yeah. So, that's in the Lloyds lab. We're part of the current cohort. It's really exciting. Enjoying the experience, what we're 2.5 weeks in.
Awesome. Well, look, thanks in the middle of that for finding the time to talk to us. We really appreciate it. But before we dive in, well, firstly, I want to clarify to anyone that doesn't know, we're probably obviously talking about the Lloyds lab, and we'll dive into that later, certainly. But Tim, before we get kind of carried away with ourselves, it'd be really wonderful if you could introduce the Yokahu business and what it is specifically you guys do.
Sure. Yeah. So Yokahu is an MGA, and we specialize in parametric insurance for weather and climate risk, with a view to making individuals who are potentially underinsured or uninsured more resilient to extreme weather events.
Amazing. Got to ask about the name though, because I was saying just before we hit record, it's given me slight anxiety about pronunciation. Where's it come from? What's the sort of genesis? We love the sort of founding name stories on the podcast.
Yeah, so it was one of the first things that came up with when I left my old job, and I was like, right, I'm going to do this thing that makes people more resilient to hurricanes, and specifically starting in the Caribbean. So the nearest equivalent is Zeus, but in like Caribbean mythology. So they have this kind of yin and yang origin story, and Yokahu sat on the mountain in Puerto Rico and protected the people from hurricanes.
Nice. That's very wholesome. We like to talk about insurance as a social good, but I think something as direct as that is quite a nice way of looking at it. And look, we're a big fan of parametrics, and we're a big fan of talking about the social good of insurance on here. So yeah, excited to have you on, and thanks once again. So I wanted to talk about how you got to here, and kind of how far along in the journey you are. Your background is in broking, I understand. Yeah.
So I spent about just under 10 years in and around the Lloyds market, working for started out at what is now Amwins, and latterly at a more independent called Meridian Risk Solutions, and started off in the facultative property market, particularly when I was at HB, as it was back then, and that sort of role really centered on the Caribbean and that portfolio at the time. And then when I moved to Meridian, it became a broader remit, both in terms of geographies and product lines. So that's my background. And I was, because of the Caribbean connection, I traveled to the region in January 2018. So shortly after Irma and Maria in particular had ravaged the region. I went to the US Virgin Islands and Puerto Rico, and we're at the point where on the placing side of the market, we'd forgotten about the events, and other than seeing rate rises, but flying into particularly the Virgin Islands and seeing every roof with the blue tarpaulin, everything bent, buckled still, and people trying to get on with life, but with significant, not much insurance money had arrived by that point. Claims were still being sorted out, and I didn't really know it at the time, but that was probably the start of, we need to do something better for people after these events.
Yeah. Is that where specifically you think that insurance as it is today in the traditional non-parametric world is really not fit for purpose? Because that seems to be the consistent theme of where we seem to let people down as an industry, like when they really, really need it in these like large scale disaster events.
Yeah, I think what was interesting about talking to people around Harvey and Maria was like, we just weren't set up as an industry to handle that many claims all at once. So I spoke to there was a shortage of adjusters because they needed to be in 3 places at once, or multiple places at once. From the 3 storms, spoke to them about why didn't you use technology, They're like, well, we had drones, but we had no process in place to use the imagery in any way to make assessments, or there was no internet connection, so we couldn't upload reports back to the office in Miami or wherever it was. So it's sort of a catalogue of errors, if you like, and then horror stories around, adjusters being let in for say 90 days on a visa to do assessments, not being able to do a formal handover, and therefore properties being re-inspected by the new adjuster who came out to replace them. It's just sort of, we didn't cover ourselves in glory, I think, from some of the stories I've heard.
Do you think there's something significant in your, I'm just trying to think about that experience of is there too much of a disconnect, do you think, between what we're doing, particularly in commercial insurance and things like the Lloyds market, and then the sort of boots on the ground, and so really the end customer and the end consumer, because that gap seems to be where things are falling apart.
Yeah, I think there is, but I think there are movements in the right direction. Like, obviously we're 2.5 weeks into the Lloyds Lab program, but I can tell you the single most impressive presentation we had in our induction week was actually from the Future at Lloyds team around claims and what they're trying to do in these events. So I think there is a will from the market to change that, and a recognition that it needs to change from the customer service point of view. It's just simply, getting on top of it, make sure you have the technology to do it, and the process and ultimately the policies need to change to enable you to do it. So often people sort of talk about parametric in that property space, and will it replace traditional insurance? And I think there's, certainly for the foreseeable, it's a hybrid model, but I think it's an interesting space to be in.
Yeah, I think parametric really just delivers on the promise of insurance as we'd expect it to be, I think, as a consumer. I mean, I talked about this on the pod a few times. I mean, quite fortunate that one of the few claims I've ever had to make was for being burgled in London, and you have to go through the kind of investigative process, and it makes sense from a claims perspective. But really, all I was thinking was, I'm going to end up getting paid a check, and I just need to go out and buy a new laptop. And really, it was all it was ever about was closing that time, because I knew what was going to happen. It's just like, when do I get it, and when can I move on? And that's in a very privileged position where it wasn't impacting my life particularly. It's just a bit frustrating. Whereas, if you're saying I need to rebuild my home, very different situation.
Yeah, no, exactly. And I think that's, and it's not like in those catastrophe situations, it's you can't necessarily go and stay at your friends or your neighbors or your family members, because they might be in exactly the same situation as you are. So it's that community support, thing. May not be there.
Yeah, completely. So that if this is like this was the genesis story, this visit, this is the kind of inspiration. How long between that and launching the business and getting off the ground?
Yeah, so I kind of it was tail end of that year, so 2018, that I made the decision I wanted to be in insurtech somewhere. But at the time I had a 6-month notice period, so no startup was going to wait for me. So I had to sort of rip cord and see where I ended up. And about halfway through that notice period, sort of the inspiration for what is now Yokahu kind of dropped. And so initially, there were a few hypotheses to work through, as with any startup, but I sort of took 6 months, did a bit of contract broking, consulting, whilst I worked in it. But I went full time on the project in January 2020. Yeah, great timing with the pandemic and everything that followed. But it's an exciting journey, and I'm really proud of where the business has got to, and the starts of the things that we are starting to develop.
Do you I'm interested about your experience of how vocal were you about you were going to do this and you were going to move into the insurtech world with some of your kind of former colleagues or kind of market contact?
Yeah, very vocal. So it was a case for me. I grew up in rural Scotland, moved to London after university, got a job in the market, and had a great time. But you kind of realise with even that, the point in my life where I did this, I was sort of 30, had no kids, no real commitments. Like, a mortgage to service, but I was like, if I don't do it now, it's never. And so recognizing that window of opportunity, but also that the career that my bosses have had of potentially carrying a paper file into Lloyds for 30 years wasn't going to exist, but also wasn't one I wanted. And so it's probably that realization for me of to take more control of my career and actually to actually pursue what I want to get out of life rather than just sort of bob along, if you like.
Yeah. No, I mean, it massively resonates with me. I mean, obviously it's something that, FinPro is my business, and it's the recruitment side of what we do. And sadly, the podcast doesn't make enough money yet. We're not Joe Rogan's podcast. I don't think as many people are as interested in insurtech as a conspiracy theory, sadly. That I think that resonates so much is that freedom of sort of almost of expression and carving your own path. And it's been really interesting to see that from someone that's in my role. So I've been doing recruitment into the insurance industry for 15 years, and you look at how those careers shaped, and they were so formulaic, really, and it was quite difficult to do. Even I've been in search meetings where we're looking for a senior figure, and it's like, well, we need someone from an underwriting background. Can someone from broking do it? And you think, if you look in any other industry, that's such a kind of obvious ability to cross one side of the fence to the other, but still having debates about whether that's possible. And I feel like some of that has just gone out the window now. We're looking at people with skill sets and being a bit more open-minded. But what I was interested about was the conversations you had with people that were perhaps not less supportive, but maybe a bit skeptical, and whether that has changed now because there's been so much investment in insurtech, and because the journeys more broadly on a macro level has been kind of more popularized, as opposed to kind of when you did it, which was a bit, a few years back now. Yeah,
I think I had to say, like, my ex-colleagues were actually pretty supportive, and I think had the business all gone wrong very quickly, then there was actually a little bit of comfort back then that they're one of the companies that hired me on the consulting side because they needed some extra hand broking and they trusted me to deliver for them. So I think the one thing I've learned is on this journey is, and I'm sure you'll identify with this, Alex, is like running your own business is far harder than you expect before you try, but also that there is sort of a recognition, and I think particularly in insurance, that where it's so relationship based around the London market, that actually there's just a lot of interest, and people will broadly be supportive and try and help where they can. And I think that's been my experience. Even sort of I went to the Caribbean Insurance Conference in June, and that hasn't happened for a few years because of COVID and things like that. But walked back in and saw underwriters I hadn't seen for since I left the market, and to a man or woman, they were tell us what you're up to, wanting to know how do we help, and so I do think there is this the great thing about the relationships you build in an under market is that there's a lot of respect and a lot of people who recognize that they wouldn't take the risk that anyone who tries to do their own thing sets out to do. And so it's I wasn't greeted with much skepticism, even if it was early for insurtech. Yes, there have been people who've doubted the insurance product or whatever, but I think that's part of being an entrepreneur, I suppose. And so you're always going to get knocks, and you have to have a certain amount of both naivety and self-belief. And so it's but broadly people recognize that they're trying to do something different and enable the market to do more. And I think that's well thought of.
Yeah, and we're seeing more of those kind of more profiles of people like yourself, like doing more insurtech focused things. I think certainly if we go back 4 years, it was more kind of technologists coming to the market and taking challenges, and now we've got people like yourself who are seeing the opportunities of some of that technology and saying, okay, well, let's kind of do it the other way around and take those relationships, because a lot of what we get paid to do is find insurance knowledge for tech-driven businesses because they don't have it in-house. And so if you start with that, it's a really good basis. But I think naivety is an important thing to mention. If I knew half the things that was going to be as difficult as they are, mainly dealing with HMRC, then probably wouldn't do it. So let's talk about the kind of practicalities of the Yokahu business. That on a very base level, how does it work? What are your triggers for the parametric? Have they changed and evolved over time? Do you work with partners that kind of help you deliver that?
Yeah, so the way we've set up is we set out to build a product for the Caribbean as a sort of proof of concept, as well as trying to solve the problem, because it's a market that individually each of the islands have very small populations, and therefore they struggle to innovate because there isn't the volume of business to enable them. What the Lloyds platform gives you is access to a number of those markets, so you can sort of pull them together and try and deliver something to those markets. So what we developed is a hardware product that pays, and so when a customer signs up or is signed up, they give us a pin on a map, as you would put a pin on Google, and that GPS location we monitor for wind speed, and when it exceeds hurricane strength, we then pay based on the central pressure of the storm. That's all pre-agreed. We have a partnership with McKinsey Intelligence Services to help deliver that, so that we have an independent trigger or trigger calculation provider, which but that one that is already trusted by the market because they're using them for exposure management, but it also, in the nature of their work, they're already beginning to work with data providers that what we will want to access in future. So and then all the distribution tech we've built, all the sort of policy administration is all ours, and then we have also integrated with the Lloyds faster claims processing service provider for tests, and so they enable our claims payments to the insurance. So everything's got a smart contract, and everyone involved in the value chain, including the local broker on Ireland and the end customer, all interact on our platform.
I'm interested as well that you built a lot of the kind of back end processing element of it yourself. Was that always going to be the case? Did you look at alternatives of kind of buying some of that in?
Yeah, so it was sort of around lockdown one, if you spoke to them, in terms of how I was going to execute this business as a then sole founder, was to raise money, pay a tech agency to build some tech, and to be honest, thank goodness I didn't, because lockdown one happened, the opportunity to raise in that environment was almost non-existent, but so I had to find a new way to execute. Found my co-founder Farid, who is fantastic. He comes from a financial trading system background, and so there's multiple years in big commercial banks building those algorithmic trading systems, and that is ultimately the architecture of our platform now. So it's all about real-time risk pricing, real-time portfolios for the insurers, which is not something that in most binders they don't get that, because there's always a reporting lag of border error and things like that. But what that does is importantly unlock operational efficiencies across the value chain, and capital efficiency for insurers, which ultimately means you can deliver a cheaper product to your customers. So that's important when you're looking at potential customers that don't have a lot to spend or won't spend in traditional markets. So you've got to make it, find ways of getting to them.
I was struck by before I get ahead of that, what's your method of distribution? Are you sort of embracing traditional distribution?
I suppose it goes back to your point about the shift from pure technology people trying to do insurance to bring in the insurance brains. We recognize the fact that brokers bring a lot of value, but what we do is when we work with them is trying to make them part of the value chain, but in a profitable way for them, but where they don't need to take 20 points, because by automating their part of it, once it's all set up, like they need one person every month to take their payments down in accounts or whatever, and process stuff. So we do work with brokers. We recognize they bring decision-making relationships, and increasingly our focus in like how do we deliver resilience to people is through the businesses that they interact with. So the way we're starting to think about systemic resilience from climate events is that people, vulnerable or not, but vulnerable communities around the world are all in some way interacting with businesses. So they're either customers, suppliers, or employees. And how can those, and so society is a bit of a pyramid where you've got people at the bottom, a layer of business, layer of financial institutions, layer of government. Those at the top, the government can protect the most. But if you don't support the people at the bottom, the whole pyramid suffers and falls down. So how do we as a business enable businesses to support their customers, employees, or suppliers after these events affect them, and manage the shared risk, if you like, of those individuals suffering?
Yeah, I was thinking that when we were talking about kind of, the sort of new profile of people coming in, all the sort of businesses now that I speak to, not all, but I think most are embracing traditional distribution, and there's been much more of an acceptance that the insurance does a good job of quite a lot of things. Less of the insurance is broken, rather, wouldn't it be great if we could give new tools and new products to the digital market, because the nimbleness in a four-man startup business to create new products that are of value to the end consumer that brokers can distribute or advise that might be good to use. You've got that nimbleness to do that.
That's one of our internal KPIs, is how quickly can we produce a commercial model and an underwriting model for a new product. Then there might be sign-offs for capacity and things like that. But how quickly can we produce these things? And that's one of the things we're testing in the lab. We want to get what with this product we're developing is certainly ready to go, if not live, by December.
Yeah, exciting. Well, let's talk about the lab then. Because you're sitting there, you're in situ, you're 2.5 weeks in. What's the experience been like so far? And I think a lot of the time when we're speaking to people about the lab, they're not people from in the insurance world, and so they're looking to get that on board. Obviously, you've got a lot of insurance knowledge and very specific to the problem you're trying to solve. So what are you looking to get from it?
So as a business, like the infrastructure we've built and the platform we've built gives us the ability to trigger events globally and pay globally. And obviously we're a Lloyds cover holder, so if within our authority, in theory, we can access the Lloyds licenses in every jurisdiction they have a license in. And what we want to do is facilitate new solutions that are sustainable, in that they're looking after people, considering the resilience of communities in them. And for us, it's about developing a particular product in the lab, but also growing our profile with the market, because climate risk doesn't touch just one silo. But the Lloyd's market is quite siloed between, like, say, property, reinsurance, credit, and actually climate touches multiple, many of those silos. And so it's really important that both the broking side of the market and the capacity side of the market understand what we're about, what we can do, what we won't do, where we add most value. So overall, the 2.5 weeks in, the Lloyds Lab has been a really great experience. The group of mentors we've got have been incredibly engaging, really helpful. We've got people from broking side, capacity side, and a bit of risk modeling help as well, which is great. Like we're end of our plan at present, and so yeah, it's and fundamentally, like, yes, I have relationships in the market, but they're not necessarily the right people for innovation. And there's an element of cementing new relationships as well.
Yeah, and it's that, I suppose it's always that classic, as you were saying that, I was thinking it's the classic in my world of when I speak to people and go, oh, well, we know everyone. I was like, you definitely don't. Yeah. It's a small market, but there's still a lot of people out there. And
I was like, I can name the companies, and I maybe know one person in every company, but they're definitely not necessarily the right person.
Yeah, and it's knowing where that innovation is going to come from. Like I'm always reminded of this. One of my former partner used to work in PR, and they used to hold these all hands meetings on putting on these big PR events, and it was always about who had the best idea. And they launched a new car, and the big sort of selling point was, oh, it can pull a jumbo jet. And they're all sort of talking about, oh, we're doing a driving event to sell the car, and then the person who worked on reception piped up and went, why don't we get it to pull a jumbo jet? And everyone was like, brilliant. And it became one of the most successful marketing campaigns like ever, and it just came from someone who worked on reception. So you never know where that idea is going to come from as well. So getting more eyes, particularly educated eyes from something like the lab on the business and feedback is so important. But I was going to ask you, as a founder, how do you balance that feedback and stay true to the sort of premise of what we're trying to do, and not continually shape the idea, and then it becomes a kind of Frankenstein's monster of not what you'd intended?
Yeah, it's a very good question. Like, we've definitely, I think you've probably discussed it many times on this podcast, like the application of parametric is huge, it's broad. Like, it's not just about weather. And we had to do a lot of internal discussions, which is about a year ago, around like, focus and how do we deliver like what we're going to do, rather than just go and chase every potential application for parametric insurance until one thing. So we and it's always going back to that, why did I set out to start this business? Take care of people after natural disasters. So and so it does it does it is a challenge, but also there's an element of what we're very much about is enabling the market. Like, one of the huge value propositions for us for being in the lab is to make sure the market are aware of us, so what we can do, but enable it. Like, there were an increasing number of businesses, organizations, governments looking for solutions to climate risk. Most of those will end up in London with a big broker at some point, and we want to enable willing capacity from the market to access those. And some of the things that we can do enable novel solutions, for example. So we want to catalyze the market, because this is a problem that's global, and if climate change keeps accelerating the rate it is, we need to solve it fast. We need to put these mechanisms in place to look after it.
I'm interested about conversations actually with capacity providers. What's been broadly what that's been like. How receptive are they to sort of parametric solutions? Are they being drawn to, I suppose, what's coming up in the conversation, more the kind of area you're playing, the climate risk area, or more the sort of novel idea of parametrics as a solution? Is there any sort of themes of feedback you get, either positive or negative?
I think there's still, I guess, when I was thinking about the execution of it, a couple of years ago, I had two options. You sort of go to the big reinsurers of Munich and Swiss, who are already doing parametric and have a lot of expertise in it, but are generally reinsurers. So, or you go to Lloyds, who have direct licenses in a lot of places where you can help people. But then, you at the time, they weren't doing a lot of parametric. That I think has changed, and I think there's a recognition from Lloyds as a whole that parametric brings the capital efficiencies that the market needs. and can be used for those specialty risks that aren't covered by traditional insurance, for example. So I think there's it's different company to company as to how developed they are in their thinking about this. But I think if we're in a situation now, particularly what's just happened in Florida and the state that insurance market was in before, where parametric solutions are going to become more mainstream, even in developed markets like that, because it will be driven by ultimate sources of capital as well as demand, and I think that's my belief on parametric insurance is in whatever line of business is when it's done well, there's absolute certainty for both customer and insurer as to when you're paying, and how much you're paying, and so that unlocks efficiencies that ultimately lead to cheaper pricing. And so and because of that certainty, you don't have what's happened in Florida with the sort of 70% of claims over the last decade before Ian have gone to public adjusters and third parties rather than the claimant, which is pushing up prices in those markets, and also seeing a reduction in capital available. So whereas that's not the case with parametric solutions, with more capital flowing into that space. And I think that's why we're going to see a turning point now. So there's definitely interest on both sides of the market into finding solutions that are parametric.
Because parametrics is so attractive to external capital that's new to the market as well.
Yeah.
Because it's a simpler thing to understand. I mean, explain to someone the value chain of a claim, in the traditional model, and loss adjusters and legal fees and the cost base. Yeah. I think externally it's quite hard to justify. Now we understand why it happens and why it exists when we're in the market, but I think you look externally, so it's much more attractive to A happens, B happens, and we pay out, or we don't. It's fascinating. It's going to fascinate what it's going to do to capital that already exists in the market, and whether it drifts away from traditional coverage.
Yeah, well, exactly that. I think that I didn't really appreciate this until 6 months ago when I was chatting to an ILS fund around the fact that ILS instruments carry a lower coupon rate if they're reinsuring parametric portfolios, because of your loss so much quicker, so your capital's not tied up. And so it really does benefit it all the way through. And so we've got to get better at it, like reduce basis risk, come up with more innovative products than we maybe have, but that will come as we all get better at this, and more data appears as well.
Yes, well, I'm every time I'm having these conversations about parametrics, I'm just struck by, if we look at really emergent risks that are completely new to the market, all of them tend to come from areas where they're very data-rich industries or data-reliant industries, and then that just gives you so much opportunity to kind of offer a parametric solution, straight off the bat. Whereas some of the parametric solutions we're looking at are coverages that are being offered as an evolution of something that already exists, and basically what we're doing is we're just serving a sort of almost a customer need for kind of a sort of greater speed. Whereas we're all existing in a world where the data is so rich that you would think as long as you can find an appropriate trigger, there's a sort of parametric solution that could be found for it. I wanted to ask you specifically though, what you think as an industry, what responsibility insurance has to sort of help people build greater climate resilience, because that's that sort of public good element of what we do. Is it responsibility? Is it just an opportunity? What should we be doing more proactively?
Yeah, so I guess the way we think about it, it goes back to that pyramid I sort of alluded to earlier, but it's, yes, the insurance industry has a responsibility to enable it, but also every member of society, every business now has it always had, but increasingly to be focusing on their responsibility to create resilience, because resilience is, or lack of resilience is systemic. if you look at people living in informal settlements, for example, in Africa, like if they're exposed to they're never going to be able to. We're never going to be able to deliver a home insurance policy for them that is cheap enough that they'll spend the money. But we can design mechanisms that take care of them, when these things happen. So, it's when a large area of the settlement burns down through a fast spreading fire or is flooded because they've built on the riverbed, and then it's actually not about putting their house back because the local government or whatever will want to go in and formalize that, so to provide services, improve that area. That will take time, but in the meantime, those people have to live somewhere, to look after the family, have to, so parametric insurance is the perfect mechanism for that, because the policy doesn't say you have, it pays out whatever it pays out, but it doesn't say you have to put your house back. It doesn't carry that onus. But when we, the solutions we're trying to create for resilience go back to people need, after these often need shelter, possibly medicine, food and water, and probably some money to rebuild. And so there's an element of taking costs away from people can also be, similarly as effective as giving them money. So, like the product we're trying to build in the lab at the moment centers around financial institutions who likely lend on property, and actually the people who are within their portfolio who are most at risk are those who are on higher loan to value mortgages, because they've got less equity. They're probably less well off, and those are the most at risk for the bank as well. Can we sort of create mechanisms where a certain event has happened and those borrowers aren't required to make repayments for a period, and that's removing that cost from them when their home insurance may or may not have immediately paid them to go and live alternatively, in some alternative place, or their car was flooded and they can't get to work, or like just takes that financial stress off. That actually in 3 months' time, or however long it is, they've had enough time to get back on their feet and keep servicing that loan. But also any surplus they've probably spent on putting their house back in a place where they can live with it. Whether it's through covering their excess for their insurance, or if they're uninsured, making repairs they could. But you are supporting that individual, which also speaks to and prevent like knock-on effects on a social, aspect in those areas as well. Whether it's kind of moving towards like a dependence on alcohol or whatever that could, because of the stress. So it's all rolled up into one.
That's really interesting. What a great idea for a product. And I think it's a conflation sometimes about focusing on it being a social good and it not being a profitable good thing to do. But and it's really nice to focus on those kind of macro results for populations. But then also it's a need, it's a gap that we can fill with insurance and that we can make money from as well. And it's doing the two things is the challenge. I'm conscious of time, so I wanted to sort of bring it up to the last question. I always like to start with this, and we probably kind of entered into it there. Obviously, this is what you're doing in the lab, but presumably that's a little bit more down the line. What's kind of immediately next for you guys at Yokahu? You're going to take the sort of same products into some new territories? Is there going to be some new products that are more immediately launching?
Yeah, so the lab product, we've made good progress in 2.5 weeks already. So I would hope to have that ready for launch. Come December. We've sort of reached out to the first few institutions for pilots, so and have figured out how it will all work. But on top of that, we're sort of looking at other projects. I mentioned the informal settlements in Africa. The reason I'm not aware of that is we've put together a proposal for that sort of thing. We've sort of got a global remit or global capability, and so for us, it's about understanding risks faced by businesses and their communities and building their projects. So part of the lab experience is to get out and build that. We're having discussions to build out new distribution methods in the Caribbean. Like, can we give micro policies away for free and collect the premiums in another way? So yeah, it's a really exciting time for the business. We're trying to do, trying to deliver the product now to groups of people that really need it, at a time when, with what's happening, it's kind of forefront of people's minds as well. And so yeah, it's the world's our oyster at this point. It's kind of just enabling other participants in the market to co-develop these solutions with us.
Yeah. And just finally, where are you in your funding journey? Is it seed round, or are you going into Series A?
Yeah, so we've largely bootstrapped today. We've had a friends and family round and a few other people from the industry have actually invested. So we've had about £400,000 in total. We're looking to open up around towards the end of the Lloyds process, probably Q1 next year. So yeah, it's as those products are developed and coming on stream, we will need a bigger team to keep developing, keep growing. So yeah, it's a really exciting time to be part of the business, and I'm looking forward to having those conversations or warming those conversations up in the next few months as well.
I'll remind you, you said you're excited about having those fundraising conversations when if I see you looking frazzled.
Yeah. You see me crying into my pint in a bar around Lloyds at some point.
Yeah. Well, we're just around the corner. We can always be there for a celebratory or commiseratory beer. So, Tim, thank you so much. I appreciate how time scarce it is when you're in the lab and also trying to run the business outside of that as well. So it's really kind of you to spend the time with me today. Super interesting business. I love everything that goes on with Parametrics particularly, but I think with your kind of mission and that kind of, we love the Genesis story always as well, but the insurance as a social good doesn't get sort of enough kind of practical airtime, and it's like a practical solution to some of those challenges. So thank you so much for being a guest on the Leadership and Insurance podcast.
My pleasure. Thanks for having me on.